The only investment guaranteed to lose in the long term is cash. I'm Nick Cody, this is Doing Finance, and I hope you're all doing well. So for the sake of this video, let's ignore hedge funds for now. They're in a class of their own and we'll get to that. So for this video, let's focus on mutual funds, index funds, and exchange traded funds or ETFs. But first, for a little context, in my opinion, the most important aspect of personal finance, aside from the education aspect, is contingency planning. In other words, if you were to lose your primary source of income, how much do you have saved in your emergency fund and how long can you keep you and your family alive? And it really starts with budgeting. Knowing where your money goes and which portions of your spending are mission critical is the first step towards contingency planning. Once you know what your critical monthly expenses are, add 10% to it, and that's how much you need to save for 1 month of contingency. Now, conventional wisdom says 6 months should be your goal, and I happen to agree with that. So take your number plus the 10% and multiply it by 6, and now you have a target value for your emergency fund. If you're there, great. If not, get there. Now, when I talk about peace of mind, this is what I'm talking about. This is the first step towards having a clear conscience. Trust me, if it's there, you'll sleep that much better at night. So you'll find this number is not an insignificant value. Not only do you need discipline and a decent income to get there, but you also need to decide where you're going to park it while you're growing it and or maintaining it for that rainy day. Now I should say, and let's get this out of the way, at the very least, do yourself a favor and find an FDIC insured online bank which pays more interest than your average brick and mortar savings account. Now right now, an average savings account will pay you 0.1% interest, which is lower than the current inflation rate of 2.3 to 2.5%. So as I said at the beginning of the video, this is the only investment you can make that is guaranteed to lose you money in the long term. So again, and at the very least, find an online bank that is FDIC insured to park your emergency fund. Now they don't have the overhead of the average brick and mortar, and they typically pay a better interest rate of around 1%. So at least you'll be losing less. But for me, I needed something better than that. So back when I was learning the basics of investment, I was always drawn towards the world of funds, which incidentally is the topic of this video. I forgot. Now, funds are basically pools of money into which you can invest, and if the fund does well, you do well. If the fund does poorly, you do poorly. Now, the fund manager has an investment strategy, and you're essentially buying into that strategy, and the manager takes her cut whether you make money or not. Usually the portfolio you're buying into is made up of many different asset classes and or individual stocks, so most funds are inherently well diversified, which is another reason I like them. In order for me to get the same diversification, I'd need to spend all kinds of time I don't have to pick individual stocks in a way that provides that level of diversification, which even if I did have the time to dedicate to building and managing a portfolio like that, I honestly don't think I'd have enough confidence in myself to do it anyway. So a fund of some kind was always the clear winner for me. Now fundamentally, they are all the same, but there are key differences you need to be aware of. So I wanted my emergency fund to be working, but I also wanted it to be liquid and available to me should I need it. So I chose to put my money into ETFs or exchange traded funds. I have another video right here where I go into depth on how my portfolio lays out, and I use the same formula for my emergency fund, so go check it out if you like. So basically what an ETF is a passive or managed fund which is traded like an equity on the stock market. Now the ETFs I invest in are index fund types which track a certain market and are valued based on the performance of that market. For example, VOO is one ETF I like a lot, and it tracks the S&P 500, so if equities in the S&P 500 go up, VOO goes up and vice versa. There are many other ETFs, some of which track commodities markets, gold, total stock market, emerging markets, and others. Now they are considered passive portfolios, meaning their investment models are based on fixed formulas, so the fees tend to be very low, almost inconsequential. So from that perspective, they've always been very appealing to me. Also, since they're traded on the exchange like a normal equity, all I needed to get started was a brokerage account, and I use TD Ameritrade, which is a fantastic broker because you get some great analytics through their Thinkorswim platform. And even better is that they don't charge commissions for equities trades, so it's super useful. So this model works well for my emergency fund because again, ETFs are traded on the exchanges, so it's very easy for me to access if and when the need arises. There are ETFs which I never cared for, including leveraged ETFs, which are set up in a way to earn faster than the markets they track, and consequently they're also set up to lose faster. So the risk factor has always been a put off to me, and I don't recommend getting into them. So be cautious and do your homework before moving ahead with any ETFs. Now the next best type of fund are index funds, which are essentially the same thing as ETFs. However, you need to buy them directly from the fund since they are not traded on the exchanges, which can take a little longer going in and coming out, and for me just wasn't a great option. Aside for that, they're essentially the same thing as ETFs and come with all the same benefits and lower fees than compared to some other options. Which brings me to mutual funds. So a mutual fund is traded exactly the same way as an index fund. However, the key difference is that the investment strategy they follow is based on the fund manager's strategy rather than on a fixed formula. So you're going to see higher fees and less flexibility when compared to index funds and ETFs, since there's more of that management factor you're paying for. Now, the fund manager may be great at what she does, but if history tells us anything, it's that the S&P 500 or the Dow Jones Industrials outperform fund managers almost always. So you're paying more without a clear benefit and in some cases a bit more risk. So it's for these reasons that I decided to park my emergency fund into ETFs. Now, I'm not saying this is right for everyone, but after quite a bit of homework, this is what I decided suited me the best. What suits you might be something entirely different. Now, I used all the same logic previously when I decided how I was going to manage my investment money. The only difference there is I'm spread out amongst index funds and ETFs with my investment accounts, and I do tend to be a little more aggressive when it comes to these as well. My emergency fund is more geared towards the conservative because while I don't care too much if month to month my investments aren't performing, I do want my emergency fund to be there and intact if and when I need it. Now again, I'm a father of two with a mortgage and other liabilities, so my 6-month emergency fund is not an insignificant amount of money, and having it withering away in some savings account with low interest didn't make much sense to me. So I put it to work, made sure it was relatively safe and easily accessible, and as a result I can sleep at night and I don't live my life in fear of losing my job. And I do have fund investing to thank for that. Whatever your choice, mutual funds, ETFs, or index funds, do your diligence, learn what you can before moving forward, and I'm sure you're going to do just fine in the long run. So best of luck to you. Let me know if you agree or recommend other strategies in the comments below. If you're on YouTube creating similar content, feel free to shout your channel in the comments so we can come check it out and keep the conversation going. But thanks for watching, and I'll catch you in the next video.